Thanks, Yushen, for the introduction. Uh, so my name is Lingfei Qian, and today I am so glad to have this opportunity to share one of our recent work when agent trades, a live multi-market trading benchmark for large language model agents with you. Thanks to the effort of the FinAI, Paul AI, DeepKing AI, and Nectar. And here is the outline for the presentation today. And first, I will briefly discuss the general background of the financial markets. Next, we will look at how large language models and agents are currently being applied to trading. Finally, this will lead us to our core contribution, AMA. I will explain how AMA, which is Agent Market Arena, serves as a new way to benchmarking these trading agents in a live real-time market environment. And we all know that trading is a difficult task. To make a good prediction for the trading, human experts have to process a massive amount of information. They need to review the news, historical prices, and SEC filings and market trends all at the same time, which is a huge workload. And at the same time, as this timeline shows, large language models have developed fast in recent years. This performance is advancing rapidly, and these models are getting so powerful. They are now perfect tools to help us process the massive amounts of complex data in trading tasks. And recently, large language models has also rapidly transforming to the financial sector. The chart on the left shows how technology investment priorities shift by company size, like from 250 to 999, 1,000 to 9,000, and over 10,000 employees with different company sizes. Notably, the focus on AI or machine learning increases significantly as company size grows, indicating that large language models are becoming core capabilities for larger firms. So overall, the trend reflects how large language models are driving both innovation and operational efficiency in finance domain. So this brings us to leveraging large language models and agents in trading tasks. Instead of a human trying to read all the news and charts at once, we can use these AI agents to process the data and help to make trading decisions. And the big question is, how well does these large language models actually perform when they trade? And here is an example of benchmarking different models in the cryptocurrency market to see their real results. And this is the website from Alpha Arena as shown in the figure. And this website is actually very famous in previous period. And it tested the performance of 6 large language models from different companies in live environments, where including DeepSeek, Qian, and Cloud, Grok, and like Gemini and the GPT family. And we can see here, DeepSeek and the Qian models achieve the best performance in cryptocurrency trading, where the gray line here is the performance of the buy and hold baseline. Only DeepSeek and Qian exceeded the performance of buy and hold. However, when it comes to trading in stocks, the performance actually changed a lot. DeepSeek still performed the first across different large language models from different companies, but Qian model like drops a lot. It even comes to the last position when compared with other large language models. Still, some of them like underperform the buy and hold baseline. We can see that all these large language models, although some of them could perform better, but actually a lot of them are not very stable in like trading tasks. And to actually make these models trade, this is the detail of how they let them make decisions. They gave them some specific prompts. As you can see here, they provide a clear task introduction on what to do along with an overview of the live market data. And along with the instructions, they also feed the agent the actual market data. As shown here, this includes detailed real-time prices on the left and the large language models currently account positions on the right to see what is the current environment right now. However, using basic large language models have some major limitations. First is that they cannot learn from their past history, and they only make some simple one-round decisions with one-round like interaction with the environment. And this is exactly why we need to upgrade from large language models to agents. We all know that agents can solve these problems by handling much more complex information and executing different trading strategies. Like we include four distinct trading agent architectures in our benchmark. So first we have InvestorAgent, which is a solid single agent baseline equipped with memory to learn from past trades. And then the second is TradeAgent. This one acts like a team of specialists, such as technical or news analysts, who debate with each other before a head trader makes the final call. And we also we third for the third one we have the hedge fund agent, which mimics a real world hedge fund by simulating famous investors like Buffett and aggregating their signals through risk managers. Finally is the DeepFundAgent, which is specifically designed to handle continuous streaming inputs and update positions dynamically by tracking history decisions. So by testing these such diverse architectures from a single brain to a complex team of experts, we can figure out exactly how an agent's internal design actually impacts its real-world profitability. And here is a quick summary comparing these four agents. As you can see, they vary widely in their like memory systems, team structures, and trading styles. And now let's take a closer look at the first model, InvestorAgent. So the most important feature of this architecture is its robust memory module. Unlike biased large language models that treat every prompt as a brand new day. So InvestorAgent actually stores past market contexts and its own historical success and failures. If you look at the diagram on the right, you can see that it uses a combination of working memory for like immediate tasks and layered memory to process deeper insight over time. It will continuously analyze this memory to refine its future decision making by like leveraging every information from the past. Because it relies so heavily on historical learning and past data, its overall trading style is more like safe but quite cautious. It generally prefers to follow previous market trends rather than making risky, unpredictable bets. So diving a bit deeper into how InvestorAgent actually thinks, it uses a very specific cognitive architecture to solve the memory limits of basic large language models. So it relies on two main parts. First is a reflection layer, and a second is a layered memory. So the reflection uses immediate reflection to update its beliefs right away, pulling information from a vector database. This reflection actually concludes how it like successful or fails in the past trading decisions. And the second is the memory, which stores complex experiences across different time frames like short, medium, and long horizons. In this kind of memory, it will remember everything happened in the market. For example, some big events from like 2 or 3 months ago, and some events from yesterday or 2 or 3 days ago. Where it also uses some decaying weights to like keep a balance between past memories and some recent memories. So it means that it will prioritize recent information, but still keeps tracking everything in the past, which is very like a balanced memory system. So by retrieving context from both of these memory types, the agent can actually learn from its past successes and failures and adapt its trading strategy over time. And the next one is TradeAgent. They have specialized raw designs, like different analysts look at different market data. Then they have a researcher agent, which will debate the bullish and bearish sides from making a proposal before making a proposal. The third is the risk management component, where a manager checks the position limits before any trade is executed. First, the analyst. Here is the details of the trade agent. So first, the analyst, which is specific agents tracking fundamentals, news, sentiment, and the technical charts to gather all the data from the environment. Second is the researchers. This is where the debate happens. The bullish and bearish agents take the data and challenge each other's reasoning to build a solid trading analysis. Finally is the trade agent. It listens to the researchers' consensus and make the final decision to buy or sell, while a risk analyst ensures everything is within safe limits. You can see a great complex of this debate process on the right using Apple stock. And next, we have the hedge fund agent. First, instead of standard analysts, it uses a team of experts. It actually simulates the specific trading personalities of famous investors like Warren Buffett, or to generate different ideas within the trading style of different people. Second, for signal aggregation, these virtual investors pass their recommendations down the line. So a risk manager checks the metrics, and then a portfolio manager collects everything to make the final call. Finally is the trading style. Because it mimics these hedge fund strategies, it takes a very constrained, high-risk approach. It's not afraid to maintain short positions and actively tries to exploit market volatilities. And here is the details of the hedge fund agent. So first, they have investor personas. The agent actually models the specific strategies of those investors. And second, the specialist agent, to support those famous personalities, it also includes dedicated analysts focusing on specific areas like valuation, sentiment, and technicals. And by combining all these different viewpoints from long-term valuation to short-term technical tracks, it perfectly solve the diverse experts you would find in a real-world hedge fund. And at last is the DeepFundAgent. First, its key feature is its adaptive memory. It continuously stores portfolio histories and updates its positions based on recent performance, making it highly adaptable to new market conditions. Because of its adaptive memory setup, it follows a very conservative decision pattern. So instead of wild swings, it aims to yield balanced and stable returns. So we involved this agent specifically to evaluate the adaptability of large language model-based agents in fast-changing dynamic environments. So this is also the detail of the DeepFundAgent. First, it has the financial planner. This agent acts like the boss. It sets the long-term goals and budgets, and then coordinates the rest of the team. And the second is the analysts. As you can see, in the table on the right, there's a highly specialized group. We have different agents dedicated to technical charts, company financials, insider trading, and even microeconomics. Finally, it has the portfolio manager. It collects all the reports from those different analysts and make the final decision on asset allocation, carefully balancing the risk and the returns. So now we all know we know that how these different agents are built, and we come to the most important question: how do they actually perform when placed in a live real-time market? This brings us to our core benchmark, agent market arena. So our work exactly aims to answer this question: the agent market arena, or AMA. Here is the four core pillars. The first, AMA, is the very first lifelong real-time benchmark designed specifically to evaluate trading agents across multiple markets. Second, it relies on verified data and news. We use live market data and expert-checked news to ensure that all the information is accurate and natural. And third, it uses a unified trading framework. This guarantees like a completely fair fight, between every agent. Those agents get the exact same inputs, outputs, and the trading rules. Finally, we test the four agent architectures we just discussed above. This gives us a diverse mix of trading strategies and risk preferences to compare. And here is a closer look at the three main components that make our benchmark run. First is the market intelligence stream, or MIS. Like this system gathers real-time prices, news, and social signals, then summarizes and verifies them with human experts to ensure high quality and high coverage. And the second on the right is the agent execution protocol. This guarantees a completely fair test. It ensures every agent gets the exact same inputs, chooses from the same standard outputs like buy, sell, or hold, and operates on the fixed hyperparameters. Finally is the performance analytics interface. This gives us a real-time interactive dashboard to instantly track key metrics like cumulative returns and win rates of all these agents on the different models. And to make our results robust, we carefully selected the underlying models and market assets for this benchmark. First, is the large language model backbone. We tested the agent using a variety of leading models, including models from OpenAI Cloud and Gemini families. So we selected two stocks, which is Tesla and BMRN, and two major cryptocurrencies, which is ETH and Bitcoin. So before the actual evaluation, the agents were trained or warm-upped using data from May to July 2025, which is before the live trading benchmark. And this allowed them to accumulate enough memory and establish their initial baseline positions before we started measuring their performance. Finally, here is the real-world results across four agents. First, InvestorAgent was the most consistent. It delivered steady returns and the best risk-adjusted performance across those most markets. And the second, the TradeAgent and HedgeFundAgent were high risk, but also high rewarded. For example, hedge fund hit a massive over 200% return on BMN, but also faced much deeper losses elsewhere. And the main takeaway is that architecture really matters. Choosing the right agent design is just as important as choosing the underlying large language models. From the results, we can answer the question like, can large language model agent trade perfectly? The answer is yes. Like all four agents achieved positive cumulative returns on at least one asset, often outperforming the buy and hold strategy. And here are the final or some takeaways. The first is DeepFundAgent delivered the most balanced and reliable results, showing high adaptability in dynamic environments. Second, InvestorAgent shows extreme potential, hitting over 40% returns on Tesla. And finally, it's just we discussed before, TradeAgent and HedgeFundAgent, although they perform very good in some kind of stocks, they also causes huge losses in some other combination or other assets. We can see that the performance depends on both the agent's architecture and the market context. And as the AMA is a live benchmark, to keep tracking the daily results, we build an interface. And here is the live results of four agents compared with buy and hold on those four assets. And this will keep updating daily to help you track all the performances of these agents in the entire period. And here is the more detailed leaderboard to track more results and details of the daily decisions, which you can see all the performances of like large language model and agent combinations on the different assets, and you can choose here on on what kind of combination you want to see and what time range you are focusing on. And now this is the results of the direct comparison before different agents and different large language model backbones. So on the left, we see the performance of different agent architectures powered by different large language models. Like we can notice that the lines are relatively spread out, but follow distinct patterns based on their design. This shows that the internal logic of an agent, like its memory or team structure, creates a consistent trading personalities. However, on the right side shows something even more crucial, like the performance of different large language models. Like when combining with different agents, as you can see from the white shaded area, the results are quite unstable. This tells us that while agents provide the strategy, the underlying model still introduces significant variance. But when large language model combined with different agents, like giving them different like trading styles, the performance is actually even more like unstable. We also can see that compared with previous work that focus on like large language model evaluation within the same agent framework, like involving more agents is actually more like reasonable. Like as we see have shared you before on the previous results. Like the first is like changing the large language model backbone within a fixed agent design actually leads to very similar results, and like changing the architecture while keeping the model constant, keeping the model same leads to massive variance. And this brings us to our most important conclusion, like decision logic, coordination, and risk control are more decisive than raw large language model reasoning power. So if you want to trade profitably, focus on building a better agent architecture rather than just waiting for a slightly smarter model could be a better option. And this is the chart that illustrates how our agents react to real-world news events and how these reactions translate into cumulative returns. And now let's look at why these agents perform differently under a major market turn. So like in the previous figure, in early September 2025, Bitcoin has a sharp uptrend followed by a sudden correction. So for the InvestorAgent with GPT 4.1 as the backbone model, it strictly followed the trend and continued to buy during the drop, unfortunately missing the turning point before the crash. While the TradeAgent, which is a more like risk-seeking agent with the Gemini 2.0 flash at the backbone, it detected the technical exhaustion. As a result, it sold into strength and closed its position before the market dropped and actually make a very big profit based on this crash. And this highlights a key difference in their personalities. Like InvestorAgent follows trends and occasionally misses turning points, which we have also discussed before. And here's the results of how agents and prices face the market sentiment. We can see that the market sentiment is actually acts after the price moves. Like here, the green part means the market sentiment is bullish, and the red ones means the market sentiment is bearish. We can see like the bearish sentiment of a market actually follows a few days after the price like comes to a big drop. So we all know that the market sentiment is not always consistent with the price variances. So here is how different trading styles directly shape the performance of each agent. So like for InvestorAgent, uh, it's more cautious and using its memory to make small incremental improvements as the market moves. And TradeAgent, which is the volatility hunter, it takes aggressive risks to catch market swings, but that it means that it also faces much wider drawdowns. And for hedge fund agent, it's not afraid of high risk or short positions. It can also suffer from heavy losses and or gains huge. And the last is the DeepFundAgent. It's it's conservative and adaptive, using memory-based reasoning to produce stable and moderate returns. So at last, here is some like implementation details of our work. First is the market information summarization pipeline. So our data comes from a huge variety of real-time sources, including FinHub, Twitter, and Reddit, to capture everything from prices to social sentiment across the entire market. Second, we use a lightweight GPT-based summarizer. This reduces the noise and redundant information while keeping all the key market drivers. As you can see, like in the prompt on the right, it's strictly instructed to focus only on events and sentiment, ensuring the agent get high quality, relevant inputs for their decisions across the entire massive like market information. And next, we have expert verified summarizations. So to ensure that our agents are getting high quality info, we sampled 20 days of Bitcoin and Tesla respectively, and had domain experts to check them. They scored the news summarizes based on three key metrics. The first is accuracy, the second is objectiveness, and the last one is coverage. So the results was also quite excellent. The agreement rate between experts exceeded over 87.5, proving our data pipeline is reliable and unbiased. And we also build up some monitoring tools for this project. So instead of just looking at static code, we have a live dashboard where we can see every agent's balance and the win rate updating in real time, as I have shown some of the results above. We can also compare curves side by side. For example, if we want to see if GPT-4 trades Tesla better than Cloud, we just click a few filter and the graph shows us some like answer instantly. Like to give a better idea of where these agents are trading, let's look at the assets in our benchmark. We choose four very different assets to create a balanced testing ground. Bitcoin and ETH. We use these to test the agents in high volatility markets where trends can reverse in instant. And the second is some stocks from real companies like BRMan and Tesla. These represent traditional stocks. And together, these assets shows us how adaptable our agents are across both digital and the traditional markets. We even have a vote feature to let the community decide which asset to add in the next benchmark period. So AMA also allows you to bring your own agent into the live arena. The agent integration process is very straightforward. So the main goal is to connect the agent from different groups through our API or in other ways. As every trading step, our system will send the market snapshot from the verified summarizations. This includes the current price, summary of the latest news, and the last 10 days of price history, so your agent can have some context. And your agent just need to follow the rules to provide a single action like buy, sell, or hold. Once connected, your agent will get real-time evaluation and transparent ranking alongside all the other large language model-based agents in the arena. It's a great way to see how your strategy actually holds up in a live competitive environment. And at last is some limitations and future work. First is limitations. Like running this agent in a live environment is actually quite expensive, both in terms of computation and the financial costs of API costs. And also, our current evaluation only covers a 2-month window. While the results are promising, a much longer time frame would be needed to see how this agent behave across different long-term market risks. Like in terms of data, we are currently focused on just four assets. So expanding into areas like different stocks or cryptocurrencies would definitely give us deeper insights. Finally, since this is still a simulated setting, we haven't able to fully capture real-world market impact or the price changes when the agent make decisions that occurs when these situations will happen in like real trading. And here is some future direction. First, we want to look into inner agent communication. Right now, most of the agents just work pipeline, but allowing them to share info and coordinate could communicate with each other like in rounds could lead to some really interesting cooperative or competitive behaviors. And second, we want to study cross-asset dynamics. Markets are connected, so we want to see how agents manage a portfolio when different assets influence each other during major global events. Finally, we plan to bring some like reinforcement learning strategies. By adding feedback loops, the agent could actually learn from their past trades and automatically refine their own strategies over time. And the last is some conclusion. So AMA has successfully established the first real-time lifelong benchmark for large language model trading agents. And the most important thing we learned is that the architecture matters more than only the large language model. While the underlying model is important, it's really the decision logic and the risk control we design in the agent that drive the final returns. And our library experiments prove that these agents can indeed trade profitably and even beat some simple benchmark through their success varies depending on the assets and their specific trading style. And moving forward, AMA opens the door for more research into how multiple agents can cooperate and learn from the market over time. And thank you so much for your time.